Hello everyone, checking back in the crypto space. Going to look at ETH, BTC, LTC, and GNT. Before I get into it, I try and be as real as I can in these videos. So over the past 2 years, I've been doing the chart guys and staring at my computer very consistently throughout those 2 years. But this past month with trading these cryptos, I've really been, staring at the screen very, very often throughout the day. And just recently, I don't usually ever get headaches, and I had this, this vision thing was going on in the top corner of my eye. And then shortly thereafter, I started getting this really bad migraine in the back of my eyes and in the front of my head. And it was just very new for me. So I just want to give a heads up to everybody that the balance between, what we're doing and creating funds and the balance between outside life and making sure we have everything in check is really important. And I personally am not doing a good job of it this month. And, it's easy to rationalize with yourself, well, I'm making this many dollars a day and I'm hitting these opportunities because I am staring at the screen all day. But it all depends, what's really worth it. So personally, I'm getting, some of those screen covers to block out the blue light and getting some things like that to try and make things a bit better. But just wanted to give that heads up because it is a reality here and we need to keep ourselves in check. So let's get into the technical analysis. ETH, we are consolidating, and that's also a benefit here. When we're consolidating, the bullish moves are fewer and far between, and it's much easier for me personally to go outside and not look at the screen and not care about what's going on because I know things are slow. You can tell things are slowing down now. The volume's slowing down. And I also want to point out here that I am anticipating this to be the norm, not now, but in sometime in the next few months, the slow consolidation, low volume, and a lack of opportunity are going to be the norm. I've seen it in every single market that goes crazy like this, where there are periods, even though, yes, the future is going to be great, this is not a sustainable run in the sense of, it's not going to do this for the next 6 months. We are going to top out, and we are going to see more prolonged consolidation at some point. I don't know when. This is an extremely strong market. It's one of the strongest ones I've seen in a long time, maybe ever, but it is going to happen. It always does. That's human psychology. So ETH is in the midst of a short-term consolidation at this point, and we're going to continue to assume these consolidations are short-term because we have our higher low, higher high pattern intact. If we pull back and set a higher low and then set a lower high and start to trade sideways over, a couple weeks, that's going to change things. But as of right now, it is still a very strong uptrend. So zooming in on the hourly time frame, I'm looking at tightening ranges, and it looks like we're just making a bear break right now. So I am looking at this hourly chart, and we can see since the high, we have been setting lower highs. And we had also been setting higher lows. So again, the equilibrium pattern is what I have been watching this morning. Our high, our low of the pullback, we had a nice double bottom. I missed this entry, admittedly, down at 206, and that was a fairly simple entry. I'll go into that a little bit more detail here in just a moment as we zoom in. But we've got our high, low, lower high, higher low, lower high, bear break. So now the bears are affirming their control. We're down at the low of the day, and this support was down here at 222, in the low 222s. So once that broke, that's the break of the bearish equilibrium pattern, and then to confirm it, we broke this uptrend line. And now we're looking at where the next support's going to be found. So I look back and say, where did the bulls buy the dip previously? Where were the bulls? Where were the bears trying to knock the price down? And the bulls said, okay, we're done here. We're going back to the upside. And the first level that stands out to me is going to be right there, the low of that candlestick. So we saw a bull move. We pulled back. We set a higher low. Bulls bought the dip, and then we saw a nice upside. So that low is at 215.25. Break that level, and we're looking down at our double bottom at 206. Zooming in on the 5-minute time frame, some things are changing. So I always talk about the correlations changing and the different indicators changing. On the way up, what I've been saying in these videos is the RSI under 30 and around 20 is automatic. That changed yesterday for the first time that I've seen in a month. And that's significant. We have to make note of that. So we utilize something, a pattern that works for us, and we keep using it. We keep hitting it until it doesn't work. So here yesterday was the first time that it didn't work, and it is actually what had me miss the 206 double bottom. I was a bit more cautious because of what I had seen in the prior action. So here's on the 5-minute time frame yesterday where we saw the all-out dump, and the indication to us that it was very significant was the volume. And you just look back on the 5-minute time frame and you compare the volume that we saw then, it's obviously much more significant. So the RSI here, we had a dump down and we hit an RSI of 20. That's normally our go signal, and that was up here at 226, and we had a very, very weak bounce. And then we dumped to lower lows, and we went from 26, and then we went all the way down to single digits. We were down at 8 RSI. I have never seen that in this space in the 5 weeks that I've been trading it. So that was a big, whoa, heads up to me personally. We did end up seeing a bounce, but anybody that got in at 20 RSI had to sit through a lot of red and had to sweat if they didn't stop out, which due to the magnitude of this move, unlikely people did stop out. I know I personally was in the red more than I would comfortably like to be on that bottom. So people were buying in the low 220s, and we dumped down to 206. So people were down about $12 if they went off the RSI that had normally been working. And granted, we did make all of that back and then some. You could have even made profit on a fairly poor entry considering the magnitude of the dump. But it was scaring me in the sense that we saw the lower high and we pulled back and it was high bear volume again, and it looked like we were going to dump right through the support and head right to 200. And we didn't, and I didn't trust that this support would hold. So because that was the first time that I had seen this kind of action since I've been trading this space, I missed that bounce, and that's something I'm okay with. Sure, I would have liked those gains. They were really nice gains, but that is okay in the rationale when I go back and review the trade or the mistrade, and that's always something important to do. If something goes well or something goes wrong, review your trade, and you can learn from your mistakes and learn from your successes as well. So looking back at that, I'm okay with skipping that opportunity and getting the next one. So that's something to note here. Also, the inverse correlation is not really consistent. I pointed out the inverse correlation in the last video between ETH and BTC. We had ETH on one side and BTC and LTC on the other. And that worked, and it was pretty strong for a couple hours. But it's very, very loose. It is not a strong correlation, and it comes and goes. So I just want to make everybody aware of that. That's not something solid to be going off of. It is something that can be utilized in the moment on the short-term time frames if it is acting accordingly. But that's not something that I would use as consistently as the RSI. So here we are hitting lower lows now. We're at the low of the day. We're looking back at that 215 support and then down at 206. If we were to dump right now down to 206, I would absolutely buy in with the RSI really low. And even maybe 215 here. RSI will be around 20 if we were to drop right to 215 from this point. So let's see if I can miss another trade while I'm doing a video. BTC. So on the daily time frame, and these lines will make sense when I zoom in, but the daily time frame here is more of the equilibrium pattern forming than ETH. ETH was stronger and didn't get that equilibrium pattern I anticipated. Here on BTC, we have our high, our low of the pullback, and right now we're still working on our lower high. It doesn't seem like the bulls have the volume and the momentum to just be able to go straight up to new all-time highs like ETH did. I do believe that we're going to set a lower high, and I do believe we're going to pull back and set a higher low, and it's going to be much more contained action, in my opinion, on BTC. And maybe even our top is in right now, our temporary top at 24.88, and now we're going to start pulling back to form a higher low. We'll have to see. This candlestick today is very small in range, and it's a doji, which shows indecision. The bulls and the bears are pretty even in that battle, and that's where the open and the close are the same. Let's zoom in here. Open and the close are the same price, and the wick, upper and lower wick, about the same size. So the day's obviously not over, but it is limited opportunity due to the tight range. So zooming in on the hourly time frame, it's a very similar pattern to ETH, where we have our higher low and lower high tightening pattern. So again, I'm using these trend lines as visualizations. I won't always just make an entry if it breaks. I like price action. Price action is king for me. So we have our high, our low, lower high, higher low. So the range right now on Bitcoin is support at 23.80 and resistance is at 24.49. I would round that up to 24.50 just to have that psychological round number. So that's the range that we're currently watching, and I anticipate a break of that range sometime later this afternoon, this evening, and there's going to be a trade opportunity if it is a bull break, because I'm only playing bullish at this point. And if we break 25.50, then we are looking back up at the recent high of 24.88. So I could anticipate maybe we get a $20, $30 move if we do get that break, and maybe the volume will indicate maybe we're going to break that high and see a continuation. So that's how I'm currently watching the setup. I'm not going to trade while we're in this pattern. The moves are too small. It's too much staring at the computer, and it's not worth it for me. So I'm going to wait till we get that break. LTC, a couple things to point out here on LTC. One of them is the clear downtrend, which I keep pointing out in these videos, lower highs and lower lows. We are seeing a nice bounce. There are gains to be had there, absolutely. And we actually just used LTC right before doing this video as a laggard play on this bounce. So we had Bitcoin and Ethereum dipping lower, and they hit an oversold RSI, and it's back here that I'm looking at, and they started the bounce like we are used to, like we're normal to seeing. And LTC had not done that yet, and it actually saw in one last push to the downside when the BTC and ETH bounce had already started. So when the price was down at the low of this candlestick, the RSI was down in the low 20s. So I pointed out in chat, or I think I was live at the time, and I said, You know, the oversold bounces are starting on ETH and BTC, and LTC is acting as a laggard. So that was just a heads up to people to look at it, you know, see if they like the entry and get in for a bounce, because we are confident that the other two are bouncing, that we're going to see a bounce here. So it ended up being a nice move. We went from 25.60 all the way up to 26.70, and then if you had patience, it did continue. Actually, no, it didn't that time, but that was a decent move to the upside. That's a 3-4% gain if you make a nice trade. And even if you exit early, it's a 2% gain. So the trades are still here. It's just fewer and far between, like I said. So looking at actually, there's one more thing I want to point out. More recently in the 5-minute time frame, and a member pointed this out in the chat room, and it just resonated with me. And it was nice to hear, you know, bouncing ideas off each other really helps, because I had made this observation as well, but it didn't really stick firmly in my mind as something to look out for. But now that he points it out and someone else says they notice it too, and I say, okay, I've noticed that as well, that's something we should keep an eye on. And it is the RSI level making 2 dips a couple times now on the 5-minute time frame, where we get our usual dip, and we're looking for that, you know, 20-30 RSI and that short-term bounce. But it's a very short-term bounce, and we lead to another leg to the downside, and we dip under 30 again. So that second dip multiple times in the past 3 days, I think it's happened 2 or 3 times, it's the second dip to buy on. But that leaves the risk of you missing out on potential opportunities, because there are going to be times where we do see our normal bounce off 20 or 30, and then we do just continue. And you might miss that bounce if you're waiting for a second dip. But there have been multiple second dips here, and that's been the bottom to enter on. So looking here at some of the altcoins, I'm just going to look at actually GNT at this point. And this was a pattern. This is a nice one to keep the ego in check, where, you know, I thought everything was working out perfectly, exactly as I thought it would, and it didn't end up that way. I'm long GNT. I'm holding until the potential for Coinbase addition, and just taking a lotto play and risking only profits from BTC and ETH trading, and just going for more of a home run trade rather than locking in these consistent gains on those other names. So GNT, we have our clear breakout, and look at how clear this pattern is in terms of similarity. We have our bull move, a big upper wick of profit taking, 3 days of consolidation on low bear volume. The third day, the bulls buy the dip with a long lower wick showing loading. It's a bullish reversal hammer. We confirm it with a breakout the next day. Upper wick of profit taking, 3 days of consolidation, decreasing bear volume. Bulls buy the dip, lower wick showing them loading up. Bullish reversal hammer forms. We get follow through. It looked perfect. I thought, oh man, this is too easy. And then the market says, shut up. And we set a lower high, and we see a lot of profit taking. So we did not close with the momentum that I wanted to see continuation to the upside. It's a bit of a setback. So we have a new resistance level at 215 up here, and I'm not using the zeros because I don't like those big numbers. So 215 is our resistance now, and our must-hold level. I will be concerned if we break 17 from here, because that will be a lower high and a lower low from the last breakout consolidation. Lower high and then a lower low. I do not want to see 17 break. Now look at the hourly time frame. I can see a lot of choppy action, and this is almost a double top. We did break a higher high. It was 214, and we did get up to 215, but it's very clear that there is profit taking going on at those levels when we reach a strong move in a short amount of time, you know, 2-3 hours to the upside, big volume, but then the move runs out of steam. So there's a clear resistance up here at 215, and we had a rejection back here as well. On the way down, we had a little bounce attempt, and we rejected from 215.4. So multiple levels lining up. And we need to see that become support in order for the daily time frame to indicate that we're going to be heading back to try those all-time highs. So that's what we got for Golem. One thing I want to point out in the altcoin space, this is a warning that everybody needs to be aware of in this space, because I watched this exact thing happen with the MJ sector in the US in 2012, 2013. What happens is you have a couple of leaders, and the leaders are here, and they're here first when the moves are happening. And that's Bitcoin, Ethereum, and that's most of these altcoins right now. But then once the sharks start to see the volume that's coming in, how easy it is to make money, you're going to see a lot of scam coins. You're going to see a lot of jokes. You're going to see a lot of technology that is completely made up. You're going to see press releases that are straight up lying, like lying. So this is not a regulated space. I see this in the stock market that's regulated by the SEC and FINRA in the pink sheets. And I see 8 companies. We started with 8 marijuana companies in 2010 when I started. And 2-3 years later, we had over 300. We had rundown penny stock oil companies changing the name of their company, changing their business plan, and their stock price was running because of it, with the company having absolutely nothing to do with revenue nor operations. And it became this shark tank where new fishes were getting eaten alive, going into these names, just trying to follow the money, trying to make the quick buck. after the run had already happened. That's the key point here. The 8 names were original. They were here. We know that they had some establishment before the money poured in. Everybody else was trying to ride their coattails and trying to ride the money and follow the gravy train. That's going to happen in this space. It's even less regulated than the stock market. Who's going to stop, Joe Smith from creating a cryptocurrency, completely lying about the development team and putting up a website, completely lying about the product and all of that? Who's gonna put that man in jail, or who's going to punish him for lying to people and taking their money? I don't know. I haven't done research on that, but I assume if it can be done in the U.S. stock market that does have regulation agencies that are set up to prevent that, it's going to happen in this space. So I would say everybody that is created right now has a certain higher tier of transparency and trust because they were here as the move was happening, and you're going to see a flood of coins. I think I read there's 700 now. You're going to see 2,000 easy very quickly. So that's not to say that other ones coming out can't be legit. I'm just saying that it's going to be very hard to tell what is what in the near-term future. And that's just a warning that I really think everybody needs to hear, because there's going to be a lot of people, a lot of new people, late to the party, not wanting, saying, oh, Bitcoin's too expensive, I want to go for these altcoins. And they're going to put their money in some bad altcoins, and they're going to give their money away. And it's going to happen, and happen big time in MJ sectors. Another thing I want to point out, just an observation I made the other day with my buddy, where the money that's being created right now is going to mostly the younger generation, but the stock market is old money in my opinion. It's older people with big time money, and as the price goes up, the wealthy get wealthier, and they make their big fat trust funds, and they go, down to their next of kin, and it just happens all over again. And that's been established for about 8 to 10 decades, and that's been the norm. This is a potential power shift where our society, we have power being equivalent to money. That's just the way it is. And we have people that have no knowledge of these financial institutions and the stock market becoming millionaires. This is economic creation and economic freedom and economic power being created and handing to a more forward-thinking younger generation, in my opinion. And that was just an observation that was really cool to make and very exciting to see how it's going to end up playing out. And not like it's, a battle, the young versus the old in terms of money. And in some degree, you can make the argument it is, but it's just a really cool space. The amount of wealth that is being created in this space is for real. And whether or not, we're going to change the internet and Ethereum is going to be the next new thing and it's going to be everywhere, that doesn't, it matters obviously, and it's going to be interesting to watch play out, but the wealth creation is already here. So that is tangible in the sense that once you put that in your bank account and you can trade these digital numbers that are flashing on your screen, and you can trade them for experiences, you can go travel, you can go and do things that you couldn't otherwise do. It gives you this sense of freedom and ability to manifest what you want in life. It's pretty incredible that is something that what we're all experiencing when we push buttons, what we're really doing and opening up for the possibilities in our life. So that's my soapbox speech for the end of my technical analysis, getting a little off the rails there. I appreciate you listening, and I'll check back in sometime soon.